Welcome back to Business Casual. I'm your host, Nav Nanwa. Investors are predicting that the Canadian dollar could be seeing a decline and could be worth 59 cents US in the year 2016. How, as Canadians, should we be reacting? I'm here to find out. I have two panelists joining me to talk about the declining Canadian dollar in further detail. I have from the Schulich School of Business, as well as a financial planner, Mr. Aleem Visram, as well as Joe Horneck, who has over 10 years of experience within the financial industry. Gentlemen, I have to ask, people are either freaking out or they think that this is a great opportunity to encourage more investment into Canada. How should we as Canadians be reacting to this? And Joe, we'll begin with you.
Yeah, I mean, I don't think the average Canadian, there's much that you can do. I mean, unless you're planning a large trip to go abroad, there's nothing much you can do in your day-to-day things. It's going to impact you on one side where perhaps, declining oil prices will give you cheaper gas, and that's a big factor in the decline of the Canadian dollar. But on the other hand, you may be paying more for groceries or goods that are imported. So there's not a lot an individual can do more, but, as a country, it's definitely going to have a huge effect on us.
Aleem, from an investment standpoint, how should Canadians be holding on to their money per se?
So I think one of the biggest challenges is people are really emotional, right? So they hear all this stuff in the media and they get really scared and they decide to sell at a time when the market is down. And really the best thing they can do is just relax, stay patient. The market goes through cycles of up and down all the time. We've seen a low Canadian dollar in the past, and it may take a while for it to come back up because of oil, to your point. But I think what they have to do is just stay the way they are. Don't really shift things too much in terms of investments. And in terms of spending patterns, you probably just want to focus on buying more local, doing things like staycations, and just remain cautious. I think eventually the market will turn. It will just take a little bit of time.
Just to build on what you just mentioned, Aleem, around how the economy moves in cycles. How long historically do you think this will last for the Canadian economy? I know it's probably hard to predict, but based on historical facts, looking back at maybe at the year 2002 when we were also at a steep decline when it came to our value over Canadian dollar, how long does something like this last for?
Well, I mean, cycles could go for a long time, depending on what the major factor is. I mean, in our case, it's been the rise of the commodities going from 2002, 2003. The Canadian dollar is on a steep uptrend for, 10 years plus. So, I mean, how close are we tied to commodities? We're pretty heavily tied. So will commodities rebound? Will they not? And a lot of it, Canada used to be more of a manufacturing sector. That's something that's been in slight decline for the last few years. I know, for instance, actually, for the first time in about 8 years, the auto manufacturing has actually overtaken oil as the largest export for Canada. And, it's been a long time that's happened. But overall, our auto sales have actually declined. Our height was actually 1999. So, that's a big industry. If that came back in and helped us out, that could help. But, it's difficult to say when you've got, how long will these trends last? No one can tell. And if you could tell, you'd make a lot of money. And you put Aleem out of the job, unfortunately.
Actually, Aleem, what are your thoughts in regards to how long you think this will last for?
It's very similar to what he said. You can't predict what's going to happen. It could be a 2-year period. It could be a 10-year period. The good thing is if you look back of the history of the Canadian economy and bull and bear periods, you notice that the periods that it's low are actually shorter than the periods where it recovers. So the recovery periods are usually longer and the returns are usually higher on the recovery than they are on the decline. So as an investor, you have to think about, well, if you look back to 2008 and 2011, the market took a really steep drop in both those periods, but if you had invested and stayed invested through those periods, you would have actually done better off than pulling out when it was down.
The one caveat, or the one benefit that a lot of individuals are seeing is that it opens up the potential for some foreign direct investment, mainly from the United States, and whether it be industries like food, retail, and even entertainment. One example I do want to just provide here is we have the NBA All-Star Game coming up. Ticket prices are fairly high when it comes to basketball fans here in Canada, but those in the U.S., they're probably loving it. They're loving probably the discount that they're getting on these tickets versus, when the game's held in the U.S. Do you see, I guess, a lot more U.S. interest or or a lot more Canadian exports getting increased sales per se because of this low Canadian dollar?
Well, some things will be more dynamic than others, right? I mean, building an auto factory, like I mentioned before, takes many, many years. So that's not something that happens overnight. It takes depressed levels for quite a while. On the other hand, like you said, tourism, something like that, that's something that is more quick, more dynamic to respond to things like this. So, hopefully you will see upticks like that. I mean, we certainly can use it. Right now, the Canadian economy is growing at half the rate of the United States. United States grew at 2.4% last year. We were exactly half at 1.2. That's the lowest rate we've seen in quite a while. So, we could certainly use an export or a foreign direct investment increase to help us out.